even as well. Yeah. So welcome everyone to Bling Invest Horizon webinar series part 2. And this is a fintech version of it, in this webinar, we're going to speak about fueling next wave of innovation. And in this webinar, we have a guest speaker, Ajay Rajan. Ajay Rajan is a country head at Yes Bank and manages the digital and transaction banking business for the bank. And that includes products such as cash management, capital market, custody, supply chain finance, and many more. Ajay spearheads the consumer and corporate digital innovation initiatives for the bank, which includes public digital initiatives such as ONDC, CBDC, account aggregator, and many more, while also managing partnership with fintechs across and alliances across India. And he has been a regular invitee to speak at various national and international forums related to banking products, innovation, and digital. He brings in overall 27 years of experience across financial services, specifically in the bank. And prior to this, he was head of fintech at Deutsche Bank. And Ajay has completed his Bachelor of Commerce from University of Delhi and has an MBA degree. As all of us are aware that India is the most and the fastest growing fintech across the globe. And it is estimated to be $2.1 trillion in 2030, with more than $25 billion of funds has been raised only, by the fintech. And there are more than 23 unicorns which have got created. And these funds have been raised across payment, lending, and investment tech. And specifically with the government initiatives, we are seeing that the UPI has really grown and completely transformed India's digital innovation with an average monthly transaction value of near to 13 lakhs crores. And there are many other government initiatives which has been created in the last few years. And with Ajay experience, I'm sure we will be learning and understanding many of such experiences as well. So to start with, thank you very much, Ajay. Really appreciate it for you to be part of this webinar. What we will be doing is for next 25 to 30 minutes, we'll have Q&A sessions where we will understand from Ajay what has been transformed in the fintech world in the last few years and how we're seeing the government initiatives really impact the fintech in the future, what has been Yes Bank's initiatives as well. And then we keep it open for Q&A, and I would request all our participants to if they have any specific questions to put it on chat as well. So Ajay, over to you for the first questions. As you know that financial services and specifically the fintech has evolved in the last few years very much, and specifically almost if you see 1/3 of investments in the fintech has got invested in last couple of years. What is the broad landscape? What are the current trend? Any specific evolution which you want to share with the our viewers out here?
Great. No, thanks, Amit, and thanks for having me over. And it was actually very fascinating to hear the numbers, the growths, that you kind of articulated. And as being part of Yes Bank now, Yes Bank itself is a startup bank, the only greenfield bank in the country, to have literally been built from scratch, right? So it's in true essence actually a startup bank. And for that bank today to have a dominant space in the overall fostering of the fintech ecosystem, I think says a lot in terms of the ethos which the bank carries. And just to maybe complement the numbers that you mentioned with what Yes Bank actually contributes today, we would house almost 50% plus of all the unicorns and unicorns in the country. Have some bit of engagement or integration or tie-up with Yes Bank. Yes Bank actually handles 1 out of 3 digital payment transactions which happen in the country today. It's a number which is not very well known, but that's the extent and that's the scale of penetration that we have in the overall fintech ecosystem and the country's digital payment volumes, as it has also grown over the last few years, right? So that's really been the contribution of the bank purely from a number perspective, since you mentioned, a few numbers. Of course, we do work with, fintechs across segments. And really, with all these engagements, from my vantage point, I do see, and of course, the industry has gone through its own bit of challenges and evolution over the last, year and a half. There is a so-called, winter in progress right now. But having said which, I do believe that players with the right business models, players with the right intent, and players with the right product solutions and execution, I don't think will face the winter as we call it. There will be money chasing those founders or chasing those companies, and there will be good profitable business which those fintechs can actually grow in this current environment. So broadly, if I have to maybe slice it to a few segments which I believe could still generate a lot of value, I would, and I'd start with maybe the hot favorite, which has always been payments. And of course, by now I think people have internalized that payments by itself may not really be very profitable in the long term. But I do believe that embedded payments may still have a good value, and payments as part of an overall proposition, which a fintech is able to dovetail, could still be a good value proposition in the coming years. Similarly, I would say embedded lending would also be something which will have a good run over the next couple of years. So broadly, overall, embedded finance by itself, I think is something which should grow, especially the working capital MSMEs, and we will talk about it over the course of the session. I think there is a good opportunity there. SaaS, I believe, will purely from a fintech perspective, will have a good future. More and more banks are very aggressively focusing on digitization, and the question always gets called, right, whether to build or buy, and which is more agile to kind of implement. I do believe, and we have been a big proponent of that within Yes Bank itself, have actually looked at partnering with fintechs, tech fins, on actually the digitization part, and also looking at more analytics and generating business out of data which is going through the bank. So I believe SaaS will have a good future. Neobanks, again, very selectively in terms of the areas where they add value. We will see good traction, and we do see certain very good names who have addressed certain friction areas in terms of both consumer as well as MSME digitization, etc., which banks are working with a lot of these neobanks and kind of co-growing the ecosystem along with them. The neobanking market size itself, I believe, would be somewhere in the range of 1.2 trillion over the next few years, right? So that actually gives a big opportunity for companies operating in that space to grow profitably in areas where value can be done. RegTech, I would like to believe, also would be a good opportunity here, because and I think the overall industry also sees the slew of regulations which have come over the last few years, and I do believe that this will only continue in the near future as well. So banks, there will be a lot of demand on regulated entities to digitize their process, to bring in more efficiencies in terms of RegTech. And this is where, again, I would like to say that companies who have built a strong, robust model in the area of RegTech, could actually generate a lot of momentum in that. The two other big themes where I believe from a trend perspective there could be a lot of value is, one is trade finance, and the second is related to that, which is supply chain. So trade finance, again, is almost a $1.2 trillion overall market business, right? That's the TAM for trade finance, if you look at it. And most of it, today goes through the counters of only banks, right? There is very limited volume where fintechs actually play a role there. And we also, or I think all understand that this is a space which is very complex, which is still, there is a lot of manual activity there, and there is a lot of friction in terms of, how customers deal with, with banks, right? And this is where I believe that, a lot of good players can generate value in working along with banks, in working along with customers, and creating solutions which could harness this opportunity, both domestic as well as cross border, as a next viable profitable segment, and also which has a very wide TAM, right? So that's, I think, a good area. And last but not the least, I think supply chain, this is again no open secret, but it is a 25 lakh crore MSME gap which is there, which is, where the credit, access to credit is limited to probably what, 20%. And this is an area where I think there could be a lot of synergies between banks, lending, fintechs, NBFCs, to generate more volumes, create more digitization, move from traditional ways of looking at supply chain, which is, balance sheet based lending, and move towards more analytics and cash flow based lending. So broadly, these are a few themes which I would like to put on the table. Of course, there will be many more, insurtech, investment tech, etc., etc. The list could go on and on, but I just wanted to pick few high impact items which I believe, where there is still a lot of work to be done. And which is, in my mind, probably a low-hanging fruit, for people to harvest.
Thank you very much, Ajay, for sharing such deep insights about each and every subsectors within the financial services. And it's very, very, good to hear that Yes Bank has been fueling the entire fintech and the financial services growth, like one in every second and third startups, and there is been fueled by Yes Bank. It's very good. And specifically, I can't agree more with some of the specific areas you mentioned, like trade finance, embedded finance, SaaS, like supply chain finance. We, as you know, that we already an investor in a company like Fintech, which is led through anchors and they give loans. I would say they're a fintech company which enables cash flow lending. It's very interesting, the growth and the demand that we are seeing on the SME and MSME side for this such type of lending. And these are unique products which is going to fuel further growth of India as well. It's very interesting to see that at one end we are seeing the banks, changing and joining hands with new age fintech, and the fintech are now obviously also working very closely with the banks and the entire financial services ecosystem to fuel the growth and reach out to different areas and business segment and different areas within India as well. It also would be good to hear your views that what has been the government initiatives which has really enabled this trend to happen. Obviously, we know about UPI, which has completely transformed the entire digital evolution. But do you see that there are other areas such as account aggregator or Gen Sahay and other areas which government is making some initiatives is also going to be a game changer the way we have seen in the UPI world as well? Any thoughts how government is looking at this entire financial services and fintech?
Amit, you said it's a 30-40 minute session, right? Time will be short if I start talking about that. It's a topic very close to my heart, and I do believe that we are very, very fortunate to have to be in this country where the government and the regulator are probably the biggest disruptors, positive disruptors in terms of fostering innovation. And I speak from experience. As you had mentioned, I did lead the global fintech vertical for a large global bank, and by virtue of that, I used to interact with a lot of regulators globally, and a lot of clients globally. And I can tell you the amount of proactiveness, the amount of involvement, commitment, and foresightedness which the regulator in India has and the government in India has is absolutely unparalleled. And I think we can, and it's all about frugal innovation, right? It's not about burning money, but it's actually everything is public digital infrastructure. Everything is tuned towards inclusion, and that's really where the strength is, and that's where really the numbers that you spoke about shows, right? So I think it's important that we start from the beginning. So it all started with the Jam Trinity as we know it, right? So today we have what 483 million Jandan accounts. We have 133 crore people with Aadhaar. We have 1.2 billion mobile users. We have 800 million internet users. I think these are numbers which have been spoken, many times. But really, it needs to be articulated again and again, because that's really where the innovation and the start was, right? So, and that's really what started. Today, I think if I look at numbers, there is almost around 2 lakh crores money which is there in the Jandan accounts. There was a there has been disbursement of almost around 6 lakh crores, of DBTs into these accounts. And, these are, numbers which are very staggering, right? And that's really where the volumes and the propensity that we see on payments and other areas is really, followed through, right? Now, that was already done, right? And to your question, what next? And this is where I think I give credit to the government, that they have not relied on only the past. They have continuously invested in the future. And this, again, I will tie it up to the numbers. I will tie it up to your previous question in terms of trends and opportunities. So if I actually marry the two, that is, what has been the trends? Where do you see future? And where is the market opportunity in the country? I think, purely from a MSME penetration, which is, really what the value is, where the value is 63.4 million MSMEs contribute to 30% of the country's GDP, right? Overall gap in the MSME market, working capital credit gap is around close to 25 trillion, 2.5 lakh crores, 25 lakh crores, sorry, is the credit gap which can be addressed, right? The MSME disbursement, while it has grown almost multiples, but it is still the access to credit is only 20%. The digital lending market itself is expected to be around 30 trillion, which, so, all of this, and which is, the consumer part of it, right? So if you look at what the government has created in terms of infrastructure and the market opportunity which can be addressed, if someone builds the right model on top of what is available, that's really what one can do, right? So now let's look at some of the things which the government and the regulator have done. There is the account aggregator, that you spoke about, right? Which is essentially the consent protocols, which democratizes availability of financial information, on behalf of the service recipient, and provides it, to the financial service provider, right? And this, while it has a lot of the consumer data, but very recently the GSTN as a financial information was also allowed under the account aggregator network. So suddenly now all consumer data and all GSTN data for the businesses, right, is available on call to be used by financial service providers to innovate, to analyze, and to deploy credit based on cash flow lending or based on surrogate data, right? Now, banking thus far, while of course, banks have done a great job, but it has been very traditional way of looking at things, right? Whether it is collateral backed or whether it is balance sheet backed, whether it is consumer or business. But now with account aggregator, I think there is a huge potential where fintechs or ecosystem partners can work along with banks, create those analytics, create those scorecards, help the work along with the banks to help create a credit policy which is more amenable to surrogate information, financial information, and open up those lending opportunities to the required beneficiaries, right? Similar is Open, which again provides the credit protocols proliferation through GST Sahay, Gem Sahay, and we will talk about ONDC, but when ONDC really shapes up, it will get embedded into ONDC as well. And that's where information through account aggregator, credit through Open can actually create a huge market opportunity to penetrate into the areas which are deserving. ONDC, you also mentioned, again, open network for digital commerce. an area where traditionally has, while it is very nascent still, right? Digital commerce itself is a fraction of the overall commerce. So that itself is a big opportunity. And there also the dominance of few marketplaces is actually now challenged by an open network, which is giving access to the entire plethora of small merchants to compete on an equal footing with the big boys. And this whole unbundling of supply chain will not only create opportunities in commerce, it will create opportunities in logistics, it will create opportunities in consumer finance, it will create opportunity in seller finance, and various other aspects, because everything is broken or unbundled through this whole open network, right? So that's that's a big opportunity. Again, this is an area where not many people are actually aware, but government has also embarked upon a very I would say ambitious project for easing the logistics cost or the process of logistics in the country. Today, our logistics cost is around 12 to 16% of GDP, which is humongous and very inefficient. The government actually is trying to bring it down to single digits over a period of time. And this is being done by creating a platform called Unified Logistics Interface Platform, ULIP, which is part of the overall PM Gati Shakti initiative and the National Logistics Policy. This again will create massive opportunities for the ecosystem to innovate, digitize, and harness the lakhs of crores of cost which is spent on logistics, right? 21 ministries of the government have consolidated data which goes into this ULIP platform, and this again will be available for the entire country, consumers as well as businesses, to actually extract and then make sense out of it and then use it, right? It also could be a very good avenue for banks to create lending on top of logistic related information, right? Then of course on the trade side, we spoke about the opportunity, but there is a lot of digitization which has happened also on the trade side. The government has, and the regulator has actually digitized the whole export import data which is between customs and RBI. You call it EDPMS and IDPMS data. So that whole data is today digitized. It will soon be available by API calls, and that is a very rich data, because you can actually use that again as a surrogate information for giving credit. The government also has created TREDS platform for the MSMEs. It started only a few years ago, but today there is almost $1 billion book. There's a $10 billion throughput which goes through TREDS. It's a price discovery platform. MSMEs, which earlier used to borrow at around 18-20%, today can borrow as low as 6-7%. Purely because of price discovery, and also because the risk is mitigated on the anchor, which is a larger corporate rather than the MSME. So, these are initiatives which the government has done. Similar initiative now is being done for exports through the GIFT City, through ITFS platform, where export factoring will be allowed, and also credit insurances can be taken to mitigate some of these supplier for some of the buyer risks, right? So a lot of these innovation which is really practically unheard of in any other part of the globe, which is because it's sponsored by the government, is available for everyone. It is easily accessible, it is cheaply available, and that's really where the ecosystem should innovate, should reduce the friction, use this data like Aadhaar was used or UPI was used, and create opportunities on all the areas that I kind of spoke about. And sorry, but last but not the least, right? The new kid on the block, which is CBDC, Central Bank Digital Currency. It's only 3 months old. India started the last, launched amongst the first. When I say first, means a size and scale of a country like India. Otherwise, you have smaller countries who launch mini versions of CBDC, but India would do those volumes, annual volumes in a day itself. And CBDC has picked up actually quite well. This, in my mind, will also become the next big innovation on the domestic payment side and also the cross-border side. Because here, you are actually eliminating counterparty risk, you are bringing speed and scale, and it is the most trusted instrument that you can get. It is a legal tender issued by the Reserve Bank of India. You cannot get safer than that, right? Especially over the last 1 week, you've seen varied newses of varied banks, going down. CBDC eliminates all of that.
Absolutely, Ajay, and it avoids any fraud, any misuse of the currency as well, and it's very good to hear that the entire machinery which is enabling the financial services, the government that they've created is really massive, and I think that it's probably one of its kind in this entire world, and I'm sure other countries will learn a lot of things from India as well. So absolutely a kudos to the government that the way they're sort of taking the lead in terms of innovation. And it's not only in financial services, you did mention in the logistic as well, which is very, very interesting. And before I move to our next question, I just thought I'll just change a little bit of gears. And we got one question which is coming from Mr. Deepak. His question is, can you share more insights on embedded lending? What are the niche area and new business models you are seeing growing?
So ONDC, like itself, as an example that I spoke about, right, is again, it's not a lending platform, it's a commerce platform. But again, if you apply account aggregator, if you use account aggregator, if you apply the credit protocols, from Open, and because the platform, the ONDC platform itself unbundles the whole buying behavior, the selling behavior, you can use that data to create your lending ability to lend to either the consumer or the or the buyer, right? So it's not selling lending, it is selling commerce, but lending through use of some of these other innovations that I spoke about can be used as a channel for creating embedded lending, right? So there will be obviously many more such examples where lending is not primary requirement, but it will follow the commerce, or it will follow the other use cases, and be used to create opportunity of lending, for the respective consumer or buyer or customer or MSME, whichever way you want to look at it.
I think one of the beautiful part of embedded finance that it reduces the cost of acquisition and any additional friction among the customer, because it's part of the entire ecosystem, and that I think is going to be great advantage apart from the data that is going to generate in taking a credit call. Now, it would be good to hear your views, Ajay, is that while we're seeing a lot of initiatives from the government, fintech is enabling a lot of things across the thing. Are you really seeing specifically the rural part of India, where digitization accelerated the journey of financial inclusion, whether the people in rural part of India and to villages are able to access across the board all the financial services product, including banking, including insurance, including I would say credit as well. So what are your views on this?
Well, I would actually say it's still a journey. And is it truly, have we achieved the nirvana in terms of including the last mile, for digital, whether it is payments or lending or any other service? The answer is obviously no, right? But have we done probably better than any other country? Resounding yes, right? And is that a focus for the government, the regulator, the overall ecosystem, to look at an opportunity to do? Again, the answer is yes, right? So now whether, and I'll maybe, take few examples here, right? Even you look at payments now, the whole AEPS, or even if you look at the whole Jandan initiative itself, was towards creating more inclusion, bringing people more into the financial, financial inclusion, right? The reason why the government again, has done DBT through direct to benefit transfers, is again so that the money goes straight into the hands of the intended beneficiary. One of the use cases, and this is again has been mentioned in the RBI paper as well, or even for CBDC, is actually to cater to low connectivity or no connectivity areas, right? Which is where a UPI today, for example, doesn't work. So is UPI fully embedded into the nook and corner of the country? The answer is no, right? Because it needs a connectivity, it needs its acceptance, right? But the whole thesis of CBDC is that at some stage, and I say some stage, is not like a long-term plan, right? It's already a work in progress, that CBDC architecture should support receipt of payment in the far-flung areas of the country where there is no connectivity or very low connectivity. It will also eliminate the trust issue or trust gap which someone in the remotest corner of the country may have on private payment players, right? And it's, we are not talking about Delhi, Bombay and other areas where, we are very comfortable with a XPay or a YPay. But when you go to tier 5, tier 6, they may still have those apprehensions, right? But when you talk about a CBDC, which is Reserve Bank of India issued currency, giving the same frictionless experience that one sitting in Bombay, gets through UPI, that's where inclusion will happen, right? The programmability will happen there. Again, CBDC is designed to be programmable. So the money, the Jandan, the DBT may go to the hands of the beneficiary, but it will be programmable to be used for the purpose for which it is being sent to them. Same as with lending. KCC, Kisan Credit Scheme is a very potent ammunition, to give farmer financing, right? That whole step is being digitized by the RBI Innovation Hub. The first project that they picked, which is a high impact KCC digitization, right? So there is a very conscious effort by the regulator to actually embed finance into the last mile, whether it is lending, payments, or whichever other area, into the tier 5, tier 6 locations of the country, right? But it will take time. But are we on the right track? Undoubtedly. And that's the opportunity as well, right? I see so many fintechs actually working on impact fintechs, as we call it, right? So the Pay Nearby, for example, is a very prestigious client for us. Today, we have market leadership in Aadhaar-enabled payment systems because of players like Pay Nearby, who've actually gone into the hinterlands. They service almost 90% of the pin codes in the country, right? By giving those digital services, they help people in those locations generate more money, through cross-sell of some of these digital products. So there are a lot of the players, who are very consciously working on that. And that's really where the strength of the Indian fintech ecosystem is, who work with, collaboratively with the regulator, with banks to create that benefit, where it needs to go.
This is amazing to see that while so many things have been done, and we being in the Bombay, we seeing so many has been there, it's already penetrated, but at the same time, it's interesting to say there's still a long way to go. And that's where you rightly mentioned there's a large opportunity to go to the different areas or different locations and different segments of India. And India is a vast country. The opportunity is as we look at it as, it's just started, and we invest only in education and financial services. And we believe that the entire fintech space is just a beginning in India. And there's so many things and so many questions can be, so many different business opportunities can be derived. And I will quickly request everyone.
In fact, Amit, if I can just add on that, the Reserve Bank of India very frequently, conducts these sandbox cohorts, right? And which is where they invite players to submit use cases where they would like to innovate in a live environment. And specific use cases are very tuned towards inclusion, and few, obviously there are other cross-border cases, etc. as well. But I generally see a lot of cases on inclusion, which are promoted by the Reserve Bank of India, and then they give full support, to the player who actually wants to work on those use cases, in those cohorts, and a lot of those cases get approved as well. So there is a conscious effort to get this done.
Absolutely, Ajay. I can't, agree more on this. In fact, the session what we have been discussing is a very interesting, and obviously we are recording this, as you all of us know, is very interesting for almost all the fintech to go through this, specifically the early stage fintech, because there's so many new initiatives the government is doing, which many people may not be even aware. And I'm sure new business ideas and new business opportunities would emerge just merely by hearing from you that there's so many things that can be done. So definitely that's of a great interest. And I'll remind everyone that if there is any specific questions, to post it on the chat box. And this, while we will look forward for our last two questions. Ajay, as you mentioned in the earlier conversation, that Yes Bank has been very active with the fintech world and the startup world. Would be good to hear how Yes Bank supports the fintech, in terms of innovation, in terms of trying to participate in the live environment, to do trial error. Would love to know how you've been supporting this, and would be good for viewers to even hear that as well.
Well, I'll avoid making it a marketing pitch for Yes Bank. So let me maybe rephrase the question, and
Sure.
maybe just say that how do I believe banks can actually take a more proactive role in
Yeah.
fostering this ecosystem. So I think it's a message more for everyone, rather than showcasing what Yes Bank has done.
Sure.
We'll use it for a different forum. But see, today I think given the environment, I think there are obviously a lot of challenger players who have emerged, right? And people keep asking this question: will banks eat the fintechs? Will fintech eat the banks? Should there be collaboration? Should there be competition? Blah blah blah, and all, right? So I do believe that we should first internalize that yes, there are players who will be there in the market. They will create disruption. They will innovate more. They will add value to customers. They will take away business, from the banks. But it's something which I think banks should internalize, and every bank should play a critical role in fostering this challenger ecosystem. If I may use that word, right? I'll take a small example, right? We and you spoke about UPI, the success of UPI, etc. So I'll just use this maybe as a very quick Yes Bank example, because I do believe this is something which is something which everyone knows, right? And which is the classical Yes Bank Phone Pay partnership. And that's really what I think people should do, which is when you identify a market opportunity, and I did mention a lot of those market opportunities which are there, initiatives are there. So UPI at that stage was at the stage where today an account aggregator or a Open or a ONDC, etc., is, right? And that is the time when Yes Bank and PhonePe entered into that partnership. And today, because of that alliance or a meeting of mind, as I would say, today UPI is where it is. And because of that, today Yes Bank, along with PhonePe and a few other players, do manage almost 40% plus of the overall UPI volumes which go into the country, right? That's the strength of partnership. And I believe, PhonePe has gained, Yes Bank has gained, the country has gained, right? So it was never a competition. It was always partnership which, helped into that. If I may maybe, put a few bullet points in terms of where can banks add value to the fintech ecosystem. They could always, again, since fintech needs to, need to innovate, right? They need a platform to innovate. Banks could create sandbox environments, for fintechs to innovate. RBI has, of course, created their sandbox. Banks like us, and there are a few other banks who also have their sandbox environment. But that's very critical for a fintech to really to innovate and see, to ideate on use cases which they could develop. Of course, providing more basic banking services, API rails, which banks can exchange with the fintech ecosystem, is again something which is very hygiene now, and every bank does that in various shape and form. The recent trend which I have seen is again on BaaS and also BAP, right? Banking as a service and banking as a platform. Now, banking as a service, very clear, bank provides their API rails, for fintechs to create business models, serve their customers, route those flows to the banks, etc., etc. And one has to realize that fintech may onboard a customer, but then the volumes or the flows always will go through the bank's rails, right? That's what the regulator also expects. So to that extent, there is a very healthy relationship between the two. The other area where I've seen now a lot of banks really creating value is banking as a platform. Every bank is also not, I wouldn't say every bank, but a lot of banks have created those platforms where they offer a single source to the customers where they can access banking and beyond banking solutions. We've done that through our platform, which is called Yes Connect. And this is where we give access to a lot of good players to our platform, and by which they get access to the entire Yes Bank customer base to offer their product and service, right? It's practically a very negligible cost of acquisition for those partners to get access to a large base of banks customers through a trusted bank platform, right? So that's a trend that we have seen. Banks more and more, and I did speak about it earlier, use TechFins, fintechs as part of their own internal digitization, and as also partners towards a larger digitization which their customers may want, right? So if my customer today, whether a corporate or the government, may want a solution, I may not have it, but I may be interested in getting the banking account for that entity. I will partner with a player who already has that solution and go as a joint value proposition to that company or to the government. And it's a win-win situation for both, right? So that's a trend which is very open now across banks. And of course, wherever there is a strategic engagement and a partnership, banks could look at selectively doing equity participation or a debt participation, right? So that's, of course, while PEVCs will always be the ones who will give the big money, but I think strategic partnership or strategic investment is something which the banks also very, very openly do now, right? To summarize, I think it is very important to evangelize and promote fintechs, who are developing good solutions. Banks, in my view, if they want to remain relevant, and I'm choosing my words very carefully, that if they really need to be relevant, they need to understand and internalize that banking is important, bank is not, right? They need to see challenger companies or challenger ecosystem as collaboration, not as competition. In a lot of areas, banks need to unlearn and relearn, right? And in lending, I gave an example of moving from collateral-based lending to cash flow-based lending. So it's a mindset which I think banks need to do. And we need to figure out, banks as well as fintechs need to figure out their place or niche in the overall ecosystem, and both need to be complementary. I think that's really where everyone needs to do. To summarize, yes Bank has done a lot of this. We are continuing to do this. We will continue to do this. But I believe that every bank should adopt this for the good of the overall ecosystem. If everyone needs to thrive.
Sure. No, absolutely, Ajay. I think it's a collaborative approach rather than winner take all, or it's mine territory and your territory. It's together we can have a bigger opportunity. The pie is large enough for everyone to be part of it and still grow and become large as well. So I've got a lot of these questions, but in the interest of time, I try to pick up one or two only. And obviously, what we will do is try to collect all these questions and see how we can answer some of them as well. But there is a specific question from Ms. Payal saying that we have seen UPI grew after demonetization. So is there any trigger point for AA, that is account aggregator, or the Ocean to really make it big? Is there something which should happen to make it big, or what should the entire financial service ecosystem do to so that both these areas become big enough?
Well, I believe the journey has already started, for doing that. Again, see, we have to understand that, all of these public digital infrastructure take time for internalizing, adoption, and consummation, right? It is not only and especially in these cases, it is not only the consumer who needs to wake up, but also the lending institution who need to wake up. Right? So the consumer may very happily give consent and he may say कि अच्छा मेरे को loan चाहिए, right? But the lending institution, the bank or the NBFC also needs to be ready, either through mindset, either through technology, either through credit policy or capital to do this, right? And that's really where the journey is, and that's what is happening. I do think, and there are literature around this as well, that ONDC could be one of the trigger points, for adoption of both account aggregator and Open. And I do say that because it becomes embedded, right? Because commerce will drive some of these behaviors. Commerce will drive some of the data which will be used through AA and Open to do it. Open is already today implemented on top of GST Sahay and GEM Sahay, which is both your consumer as well as MSMEs. And while the volumes are fairly low now, but I think that's a proof of concept which lenders are looking at, where the MSMEs are looking at, right? Trades, for example, as an example, 3 years back was few hundred crores. Today, as I told you, the volume is $10 billion in terms of throughput, $1 billion in terms of book, right? So it will, these are initiatives which are really, really now picking up. And I would say in a few years down the line, it will be a very different size, that we will speak about. And that's, will mainly come from evolution. Of course, there could be a black swan event, like Demon happened or COVID happened for digital payments. But do I have a crystal glass to tell you what that event will be? The answer is no.
No, thank you, Ajay, for your insights on various areas of financial services. And we have already crossed a time limit of 45 minutes. So I would like to, personally thank you once again for taking out time and really enriching all of us on what the government is doing, what is happening in the fintech world, how Yes Bank is supporting, and how the next future of growth opportunities are, specifically in the areas of lending, in the areas of cross-border transactions, SaaS, as you rightly mentioned, for the banking infrastructure. So I'm sure we all would be very excited to see how some of this span off in the near future as well. So thank you once again, Ajay, and thank you everyone for hearing us, and really appreciate it, everyone. So thank you everyone.
Thanks, Anand. Thank you.